Recently in the news, there was a proposal by Biden where he wanted to create a new public reporting agency and end private credit bureaus. So in this video, I'll go over what the Biden plan proposes, why the current system is broken, and what does this mean to you. What's up, winners? My name is Nam. If you're new here, welcome. Here we talk all things personal finance and credit. Start out by subscribing so you don't miss out on any future videos. Before we get into Biden's proposal, let's talk about how credit scores work and why there are so many problems. The three biggest credit bureaus the majority of lenders will look at will be Equifax, Experian, and TransUnion. In fact, some of these companies have been around for quite some time, like Equifax. They've been around since the late 1800s. The goal of credit scores is to judge individuals on their credit worthiness. Let's just say that you got a brother named Joe. You lend him $100 because he needs some new shoes. You, as a lender, need to consider whether or not you will get this money back. You need to think about whether or not he has paid back other loans that other people has lent him. Have you ever lent him any money and he has paid you back? If yes, then he's probably trustworthy. If not, you probably never see that $100 again. The goal of credit scores is to show lenders that you're able to pay back the money that you borrow. Even though this system has been around for so long, credit scores are nowhere near perfect. One of the biggest problems with the credit bureaus is that they're vulnerable to hacks. The most recent hack was back in 2017 when Equifax exposed personal information of over 140 million Americans. A couple of years earlier, in 2015, Experian, which is another large credit bureau, was hacked as well. 15 million people who applied for Experian credit checks had their private information exposed. In both cases, these were last names, addresses, social security numbers, driver licenses, and also passport numbers. While these companies have agreed to settle the payout for those who are affected, the money means nothing if hackers have access to all of your personal information. While this is not the only problem with the credit bureaus, is that as crazy as it sounds, the FICO credit score is a real-life monopoly. In the United States, 90% of all lending decisions is influenced by your FICO score. Imagine playing Monopoly and one player has 90% of all the real estate. They own all the railroads, they own all the reds, the oranges, the blues, and you're just stuck with the utilities. There is no way that you can make one round without getting wrecked or just going straight to jail. While there are other credit models and credit bureaus who have their own scores, when it comes down to determining whether or not you get approved, your FICO score is what matters the most. Most people are aware of their Vantage score, since it's much more accessible. Free apps such as Credit Karma and the majority of banking apps will show you this type of score. This score will give you a good estimate and prediction of what your FICO score can be, but this won't be the number that credit card companies and lenders will care about. Now, this brings us to our next problem, which is racial disparities. According to FICO, there is a wide range of information that is not considered when calculating your score, such as race, religion, sex, marital status, age, salary or occupation, and where you live. But there has been many critics and researchers that suggest that the three credit bureaus have played a role in economic inequality. Credit scores have been shown to have a discriminatory effect against African Americans and Latino communities. Credit is kind of like a double-edged sword. Having great credit can save you more money on interest, qualify for the best rates, and have much more opportunities. One fatal mistake on your credit can cost you hundreds, if not thousands of dollars in interest and whether or not you can get approved for lending. Many studies have showed Black and Latino consumers as a group have a lower credit score compared to their white and Asian counterparts. There was also a CFPB study in 2015 that showed that those same Black and Latino consumer groups are more likely to have no credit scores at all, which is also known as credit invisible. So this brings me on to my next point. There are roughly around 45 million Americans who do not have a credit score. As I mentioned before, the majority of these individuals are disproportionately Black or Hispanic. Due to not having a credit score, this leaves them unable to borrow money or use credit cards because they're not players in the system. Additionally, if they do have some credit, the credit report may be too thin, which means that this is not enough information to get approved for a loan or a credit card. Another huge problem with the current credit reporting model is that mistakes are way too common. There has been numerous studies that have been going around that says that anywhere between 20 to 79% of credit reports have errors on them. If you're one of these people who have errors on your credit report, unfortunately, you're going to be the one who's going to be paying for these mistakes, meaning that you're going to be getting higher rates and your terms are not going to be that favorable. The sad part, a lot of these individuals who do have errors on their credit report, they usually have no way of knowing. Every individual is entitled to at least one credit report from each one of the credit bureaus as long as they request it. Most people nowadays have some form of credit monitoring either from their bank or a third-party app such as Credit Karma. But the information on these third-party apps may not be as accurate compared to getting a credit report directly from the credit bureau. If you are a person who happens to have one of these errors, it can be sometimes difficult to correct. To combat errors, there are laws to protect consumers, which is called the Fair Credit Reporting Act, which gives you the right to dispute any information on your credit report that's incorrect or incomplete. Once the credit bureaus receive your dispute, they must investigate, which is typically around 30 days, then they must delete the account, update it, or verify it as correct. Even though this sounds simple, credit repair can be more complex. So that's why you can learn and try to do it yourself or hire a third party to help you out. Since these are some of the biggest problems with the current system, now let's talk about Biden's proposal. Under his proposal, instead of having 3 major private companies owning the majority of credit reports inside of the United States, there would be one public registry housed by the Consumer Financial Protection Bureau, also known as the CFPB. This new government option would accept non-traditional payment histories such as rent and utility bill payments. He also wants to create a non-discriminatory algorithm, but is really not clear on how this algorithm would even work. The main reason why Biden wants to replace credit bureaus is that he wants to make home ownership more accessible. Therefore, he suggests the federal housing program such as the FHA to use his new scoring model. But at the current moment, the new acting director of the CFPB has declined to comment whether or not they are pursuing to establish a national public credit registry. So is this really the end of credit scores? From a person who loves to talk about credit and also does credit repair, I believe that it's very unlikely for credit scores to be going away anytime soon. The key reason behind this is that if the credit bureaus are going to be replaced by the CFPB, they are definitely going to need a huge hiring surge. This organization only has a handful of staff that need to manage millions and millions of credit reports and definitely needs to build an infrastructure to handle this properly. For there to be a transition to happen, this is definitely going to take a long time. If you have ever worked for the government or have been in the military, fast and speedy is rarely the case. We all remember how long it took to get the stimulus checks from the first time. Gratefully, this last check, it came really quick since everything was in place. But even with the proposal of replacing private credit bureaus to a government-managed credit reporting system that accepts rent and utilities, FICO has already beat them to the punch. The credit bureaus has already came up with a credit scoring model that pretty much does the same thing, which is called the Ultra FICO score. This new FICO score will benefit people who have lower FICO scores or no FICO score at all. It incorporates a wide variety of data, which allows more people a chance to actually increase their credit. But there are 2 major key differences compared to traditional FICO credit scores. The first difference is that the Ultra FICO score uses a combination of credit report data and information about your money habits from your bank accounts, such as your checking account or savings account, to generate an Ultra FICO score. The second key difference is that the score is only generated if you opt in. This means that you would have to sign up and open up an account. While this new score was created to allow for more people to get access to credit, it also opens people to more debt. I personally don't think that most lenders will use this credit score since there are 2 newer FICO scores like the FICO 9 and FICO 10, but most lenders still decide to use FICO 8. It probably boils down to the cost. But not all is lost for those who do not have a credit score. Here are 3 simple strategies that anyone can use if they are new to credit. The first one is the piggyback method. This is probably one of the easiest ways to get a credit score. You essentially get added on to another person's credit card and you piggyback off of the credit information. This works best for those who have family members with excellent credit. You wouldn't want to hop onto your parents' credit card if their credit score is 550. Also, you want to make sure that they keep a low balance too, since everything that happens on this credit card can affect you too. The second way to easily build a credit score is by getting a secure card. I think this is the next best option since it holds more weight, since this is your own personal line of credit. A secure card or a secure credit card is when you would have to deposit an amount of money, usually around $200 and up, and this will be used as your credit limit. There are plenty of secure cards out there that will eventually graduate you to a traditional revolving line of credit after a year of good history. Another way to start building up some credit, especially for an installment line of credit, is that you can get a secure loan or a share secure loan from your credit union, your bank, or a third-party company that allows you to do this yourself, such as Self. This is where you would agree to pay a certain amount of money, let's just say $1,200 a year. Every single month, you would make a payment of $100. Once you make $1,200 worth of payments and the year is up, you will get this money back minus any fees and interest. This is a great way to build installment lines of credit and add to your credit mix. So when it's all said and done, even though there are plans and proposals for moving credit bureaus from the private sector to the government sector, we are still a long way from this actually happening. There are still many ducks the government has to get in a row to make this work. But in the meantime, it is still very possible for many individuals who are credit invisible to start building credit themselves. Now I want to turn it over to you. What do you think about Biden's new plan? Let me know in the comments. I'll see you in my next videos.